Hello, everyone. Welcome to another episode of the Crypto Collaborative podcast, the official podcast of the Crypto Collaborative. My name, as always, is Tyler, and this is our founder and CEO, timnihill. And today, as promised last episode, we're going to be talking about the influence of computers on business. And this is a very big topic to unpack. I imagine that's why you wanted to talk about it so much.
Sure. I'll give it to you very, very quickly.
Oh, you brought notes.
I did bring a note.
He's very excited.
Post I had the other day on LinkedIn with someone. I responded to her.
Please, the floor is yours.
The ChatGPT moment is coming for wealth management. Not because AI replaces advisors, because it replaces what most advisors charge for. Research, portfolio construction, rebalancing, reporting, all that in fake financial planning, and retirement planning, because you don't need that anymore. So the cost structure that justified a 1% fee is collapsing. Clients will figure that out. Most already are. Fewer firms, higher trust, actual fiduciary accountability, not the performative kind. So the watershed moment for financial services and wealth management is here. And I don't know what to tell you.
I mean, you've been mentioning genuine fiduciary liability for a while now, like genuine fiduciary duty as opposed to these fake financial plans and platforms. You've mentioned that for a while now, and the way in which technology is accelerating that is impressive, to say the least.
They're going down.
I'm kind of wondering, before we get into today's technology, walk us through sort of how this evolution came about, because you've been all over the market, you've been all over the industry. What were the kinds of systems, I guess the best way of putting it is, what were the kinds of systems that this came from? What were the kinds of systems that you used, in the early days in the 90s and 2000s that you started out on that this evolved out of?
Pencil, notepad, Rolodex, phone book, phone.
Like a call center?
Basically, I had a Rolodex, phone book, notepad, phone, pencil. Index cards. We had index cards too.
You had index cards?
Yeah.
Like genuine fiduciary firms, investment advisors, and you had index cards.
Yeah. Yeah, exactly. But they didn't have fiduciary work back then.
What do you mean by that?
Well, no one was a fiduciary back then when I started in the business.
I know, that's what I'm saying. What do you mean by that?
You mean the reason why there's no fiduciary or there weren't fiduciaries?
Yeah, back then.
Just didn't exist.
So it was
no one was even, fiduciary work didn't really start happening until really 2005, 2007.
I can see that.
So.
But what about the systems?
Well, the systems have evolved. I mean, they were all Microsoft-based systems. You had CRM systems. A lot of your planning you still did on the back of a napkin in a notebook. And then financial planning software came about, Monte Carlo. We got into quantum back in 2010. So that's really when the black boxes started to take over. And then it became high-speed supercomputers, trading algos and all that stuff, like what major financial firms have had for a long time. It's always been there. Quantum computing is not new. I think IBM started that in early 70s, maybe even the 60s.
Oh, yeah.
So it's just stuff that, we were talking about cloud computing back in 2008. And so all this stuff is just becoming mainstream now. But for a lot of people across the board that have wealth managers that are charging them 1%, you're gone.
Yeah.
You're replaced. Right? There's a new app that's out and it says, just put in $200 and in, 6 months you'll have $7,000 in your account because it's trading for you. Right? So in relative to the public markets, which, by the way, are all going away. Stock market's gone. Your bond market's gone.
Mm-hmm.
Just pay attention to what the predictive markets are doing, Kalshi, Robinhood, etc. Like, I mean, shoot, I could have placed an investment, right? I could have placed an investment that Tiger Woods was going to roll his car again.
Oh, yeah.
Right? It would have given me probably some decent odds and payout, and then when it happens...
He keeps getting into trouble.
Can someone please take the car keys away from this guy?
It's just
seriously.
he's just too good at golf. He's too OP at the game, and the devs have to nerf him.
I guess, but relative to...
He is the greatest golfer to ever live.
Relative to...
I will die on that hill.
Yeah. Yeah, I mean, probably greatest golfer to ever live, greatest career that anyone's ever had. I would probably go with Mickelson, actually. Based on longevity, success.
You didn't say that.
I just did, yeah.
We're going to be fighting after this.
Yeah, probably.
Cage match.
Lefty power, baby. So, I've done this myself. And I've done this with our firm. So, I took what I learned across my times at the firms I've worked with, married it with the philosophical institutional approach, and with my own private AI, I've developed my entire infrastructure that runs money, due diligence, research, and forget portfolio construction, because we always will construct this strategy around it, but it's the nuances of the execution and the risk management side and how that works together. Mm-hmm. And then the due diligence from, an investment perspective. Morningstar's gone. Due diligence teams are gone in the alternative investment space. If we would bat 9 out of 10 for every alternative we did, that 9 out of 10 were successful, maybe even a little bit higher. I've pushed that now to probably 97, 98%. So now my due diligence alternative platform is stronger. My commodity platform is stronger. My AI platform is stronger. My crypto is stronger. And most advisors still don't even do Bitcoin. Oh yeah, we could sell an ETF. Seriously, you're toast. The most valuable asset in the world is Bitcoin. And everyone's like, what if it goes to zero? Mm-hmm. What if what goes to zero?
I'm kind of wondering
what does that mean?
Is that even possible?
Right. It's not, because Bitcoin's intrinsic value is not correlated to the monetary system that everyone's been brainwashed to follow. Mm-hmm. There is no value to Bitcoin outside of 1 Bitcoin equals 1 Bitcoin. And I got a deck yesterday for a new real estate group doing a capital raise where they're out there and they are going to replace real estate agents. Real estate agents are gone. Financial advisors are gone. Wealth managers are gone. Financial planners are gone. Retirement planning is over.
So really you could say, in a macro sense, the influence of computers on the market is the removal of intermediaries.
This next generation of technology is the removal of intermediaries. You're going to need the people that can communicate with the technology and get it to work properly and do what you need it to do to execute.
Wouldn't those be a new kind of intermediary?
Not really.
What's the difference?
Because it's different, because the interactive stuff still is still driven, like it'll have more, computers will have more communication directly with clients. So you are replacing people, right? Mm-hmm. You are replacing people. Who's it this morning that they're laying a bunch of people off? And even one of my friends got tasked with they're like, okay, we have 10,000 employees and we want you to use technology and get us down to 1,600 employees. Mm-hmm. So the intermediary, the middleman is gone, because you don't need a financial institution per se to transact in money anymore. Like I can use crypto and do direct transactions without having to clear through a bank. Right?
Yeah.
So a lot of the middle people are removed, but you will have a new generation of firms with solutions and technology that are equipped to handle this new world. And if you look at what's happening in the advisory world, is everybody is basically falling asleep.
Yeah.
You think that it's the same old, oh, the United States is at war again, and we'll win a war in the Middle East, and then our markets were going to go back up, blah, 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 whatever. What you don't realize is this war is over minerals and energy, and it's basically World War III. The wars we fight now are technology-based. They're not dropping bombs per se. It's strategic what the U.S. is doing right now, but
the Ukrainians in particular have become really good at drone warfare.
Yep,
they have an entire core. I think the Ukrainian drone core is the largest in the world, or very nearly.
It's all robotics now, right? Like, why do you have kids playing Call of Duty? Well, they're one step away from the military.
Soldiers play Call of Duty for training.
Right. So this next generation of technology is different because it's more interactive and it's more programmable for an everyday user.
Mm-hmm.
If you're out there, sure, you could hire an app, hire AI, hire ChatGPT, whatever, to build you a portfolio, but you're going to fall flat on your face with the execution.
Yeah.
Right? You don't have access. Like, if you're an individual person, you're never going to have access to the specialty stuff that institutions have access to. But for advisors that are out there charging 1% on asset allocation for stocks, bonds, and cash, you're toast. You're done. There's nothing you provide that this next gen of technology can't provide. And then the other thing is going to be the catastrophic collapse of the broker-dealer industry. Wait till it's already happening. I had a situation earlier this week with some people I know where...
We mentioned that in the previous episode, too.
Right, okay, so if you're at a firm like Merrill Lynch, Wells Fargo, Ed Jones, Morgan Stanley, whatever, their entire ecosystem is built on revenue sharing. So if I'm in the hat business and I'm a big hat guy, right? I like hats.
No, really?
Yeah, no, really. So I'm a hat guy. Well, do I want to go to a store that has 3 hats? That's basically, the selection is based on how much money those manufacturers are providing and paying that hat store to have access to my money?
Mm-hmm.
Or would I rather go to the shop that has every hat possible, and then I can pick and choose which ones I want?
I mean, yeah, that's the point of the shop. You walk in, you buy something, you leave.
Right, and the revenue model doesn't even make sense, because if you're the 3-hat store, and yeah, you're getting revenue sharing and getting paid in the background, and yeah, we're fiduciaries, but our legal team has put together 100 paid contracts that no one's going to be able to get through, right? So they're not really fiduciaries, they're not really responsible, because they're protected by just armies and squadrons of attorneys. Or would I rather go to the more efficient shop where I could have access to hundreds and hundreds and thousands of hats, and then guess what? I'd probably buy 100 hats because I have access to it.
Yeah.
Does the cost matter? No. Selection does.
Mm-hmm.
And these platforms are going to get nailed in a class action lawsuit. I don't know who yet, but it's coming.
I mean, just on a logical basis, you're more likely to, be interested in a product if it's more accessible to you, if there's a wider selection of that product that's accessible to you. And so the more people that are interested in a product, the more money that product is going to make overall, as opposed to if that product was, say, more selective, and sure, then, people with bigger budgets would be able to buy it, but less people overall, the math adds up where in the end you want to, you want that family pricing.
For sure. And I want customization. So the other thing that is this next generation of technology is tokenization. Right?
How did that technology get started? Did it come about
blockchain.
Did it come about with the blockchain, or was the concept of tokenization earlier?
No, I think the concept of tokenization has always been talked about. I mean, I had a couple people I used to work at BlackRock where we used to talk about how to create a stock market where you basically buy and sell people and invest in people.
Mm-hmm.
Right? It's like people stock. So if I have someone coming out of college, and let's say they're a good athlete, let's say they're a doctor, attorney, or let's say this kid's got a great mind and I think they're going to do well. So I'll give them 100,000 today and they give me X percent of income for X amount of years.
Yeah, it's like a Shark Tank kind of thing.
Yeah, so you're now going to get the tokenization of assets where all your assets are listed on the blockchain. And here's the problem for the middle people, because the blockchain is a public ledger. And so customer A can communicate with customer B, or AI A can chat with AI B, do a transaction, come to agreement, execute the contract, and then execute payment via cryptocurrency and Bitcoin and Ethereum and whatever the agreed upon medium exchange is. Forget the dollar, because you could use stable coins if you want, because you only need stable coins that translate to your local markets. And now I have technologies working with technology. I have no middle people. I have no bank. I have no real estate agent or middle person. And the transactions are done seamlessly, instantaneously, and without borders, boundaries, and limitations. Now the fight over all of this is control.
Mm-hmm. Has this been sort of the major obstacle in this day and age to the continued evolution of the technology?
Yeah, for sure. Because everybody is fighting over control of the monetary and economic system. Because the old system of traditional finance and economy is dead. You look at oil, your new price of oil, your standard price of a barrel of oil now is $100, not 60. Right?
Yeah, that's crazy.
It's crazy. So, and I mean, you think about that. That's like a, 2/3 price increase?
Gas prices are going up.
That's a 66% price hike. So that's your real inflation is 66.6666667, right? With the line over the top. That's your real inflation number. It just hasn't gotten priced in until now.
You might almost say that price increase is demonic.
Yeah. And so now, it's like I said before, I can manage $100 billion with basically 7 people, where traditionally it would take me 100, 200, 300.
Mm-hmm.
So my company profit margins are streamlined. I'm way faster and more efficient than everybody else. My productivity level's through the roof because I can either get on my computer or use my phone with what I have and go, hey, here's what I need. Ding! Oh, by the way, client account reviews. Bing, bing, bing. Takes me 5 minutes per account. It runs everything I needed to run through my technology and my tech stack with my philosophy, structure, and all that stuff. It gives it an institutional scorecard that everybody understands. It reframes how people think about money because we're no longer chasing performance, which is a poor people number. We're chasing wealth and building wealth. And now people get out of this, well, oh, you're right. My S&P 500 isn't up 9% year over year because I have to pay 20 to 50% of that money to taxes. So really my 9% is closer to 7, maybe even 5. because now we're having the net of tax fee and tax efficiency conversation.
Mm-hmm.
And oh, by the way, the analysis that's done with quantum and cloud computing is way beyond, like the risk analytics you can do are way beyond anything you've been able to do before. And I have a bang, 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 bang. It is seamless. The report cards I run now. And I eliminated pretty much all human error. I increased speed and efficiency because I can run, I don't know,
Guess.
depends how long I feel like sitting at my desk. Like, let's say I could run 20 full portfolio client reviews per hour.
Wow.
So if I want to sit at my computer for an hour, 5 hours, like we're a philosophy and quality shop. We're not a quantity shop.
Back in the index card days, how long would it take you to do a review manually?
Forever.
Like how many hours?
You'd have to download reports for the system, analyze, put it all together. It would take you weeks.
For one.
Yeah.
And now you can do 20 in a day. Or in an hour.
20 in an hour. Just click, 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 upload, click, upload, click, upload. Maybe a little bit more, maybe a little bit less, but that seems about right. Like 3 minutes. And then, I have to go, and then I have to go send it to the client. So let's say maybe that takes. But the point is, in 8 hours, I do 160 reports. And that's a day's work.
That's crazy.
It's pretty freaking easy.
So you would say, so then probably another way of spelling out the impact of computers on the business in particular is just that not only is it faster, or I guess
put it this way. Okay, so what do you think of this stock? Put it in it, dink, here you go.
Yeah, not only is it getting rid of the middleman, but it's also just generally faster.
Oh, it's 1,000,000 times faster. The productivity levels are through the roof.
How does that impact the entire process?
Well, it makes it better. Because now what I can do is I can download my entire book at the same time across our entire family office and have all of the holdings analyzed together from a qualitative, philosophical, quantitative perspective, and then tie it back. So it allows me to, because everything we do for people is custom to those people. We're not a fit-in-the-box shop. Like, it drives me crazy to think that I would go to a firm like a Fidelity or Vanguard and they're going to put me in some shit 60-40 portfolio, 80-20 whatever, and treat me like I'm every other Tom, Dick, and Harry on the street. Sorry, bud, I'm unique and I'm high quality. You better get better at that, right? So now, not only can I look at all the analytics and the things I need to look at on a family by family, individual company by company basis, but now I can look at my entire risk exposure across my entire family office. That one takes 5 minutes.
Mm-hmm.
And so now, not only am I managing what I need to manage at the individual level and account level, but I'm also managing my life and business from the macro level. And if there are any gaps and risks that we're not seeing, we'll see it now. And you can't do that anywhere else.
Mm-hmm.
So, I mean, think about this, right? Like, what do most advisors do? They run financial plans and they do retirement planning. Well, retirement planning, I'm sorry to say, is gone.
Mm-hmm. Yeah, we already covered that one.
So that's over. And financial planning, no one believes in it. I mean, it is what it is now. And nobody believes that you have to work hard to make money because that's bogus. That's nonsense that we're all taught, right? I mean, you could go there are plenty of women out there, as a friend of mine said today, there are plenty of women out there on welfare working 3 jobs that have no money and they still need the welfare check.
Mm-hmm.
So don't tell me that work hard translates to making money. It
Even
doesn't.
having a job these days as a working class American is a luxury. I mean, I know so many people who will do 150, 250 job applications a day and are still collecting welfare and they're unemployed. And they're sending in tons and tons of applications and it doesn't matter.
Right. And the other thing that advisors are not capable of handling is the next generation of wealth. Like, you have to be in a position to create sovereign wealth.
Mm-hmm. And we talked more about that on our sister podcast,
Right,
The Bridge.
Because in today's times,
So be sure to check that one out.
you now have, it's the best way to say it, you now have like home risk, if you will, location risk. It no longer behooves anybody to have one citizenship and one passport.
Yeah.
You have to diversify your risk across multiple locations.
It's the same way as people say, oh, why don't you diversify your investments? It's like you have to diversify your countries.
You have to diversify your countries now because
All the biggest, richest people in the world are like beyond borders. Like it doesn't really matter where they go.
And that is the new game. You have to be without borders, boundaries, and limitations. SEC, FINRA rules and regs are not built for that. Broker-dealers are not built for that. And you also have to, as an individual, you have to diversify. And you have to have portability. And that's why I get it. I like gold, silver, and all that jazz too. But if I need to pick up and move to Portugal tomorrow, I can't exactly pack $2.5 million worth of gold bars onto a jet and take it with me.
Are those regulations really ever going to be like ready for that? Are they ever?
By the time they're ready for it, it's going to be too late.
No, but I mean in the sense of like there's still national level regulations created by nation based like the state level. So it's like, are they really ever going to be truly ready? Because they're hamstrung by the very nature of their creation and their enforcement.
I think that you will get new regs across the board. You are potentially I bet you FINRA goes away. Especially after they just found that $2 billion slush fund that the FINRA execs have been collecting. Commission business, like what's that? And in the next generation, like, are you going to sell them an index annuity? No. Like, or fixed index, whatever. I don't even know which one we can't do because we're RIA or whatever, but it doesn't matter. The SEC is going to get completely revamped.
It's already happening.
They lost the battle for crypto, as the major cryptocurrencies are considered commodities.
The SEC lost the battle. They gave it up. They
now,
were like,
now your most valuable asset that you need to own is a commodity. So that takes it out of the purview of financial advisors. And it's just, you're going to get tokenization of assets. You are going to have to compete with new solutions that are out there that already do financial planning for people. And a lot of advisors, because of the fact that they're selling a commodity in a package, they're not actually adding value, their days of making 6-7 figures and doing nothing is over.
Yeah.
And you're going to see shops that have couple billion under management, 6-7.
God damn it.
They're going to have a couple billion under management and they're going to be gone.
One of these days I'm going to sneak that past you. You're not going to notice.
So the adaptation of technology is absolutely there. The next wave of advisory firms that are going to carry people into the future are starting to pop up. Mm-hmm. I mean, we've already been here for a while. And you just have to, as an advisor, you have to get to the point where you have to have a real honest conversation with yourself. Getting called for soccer. Awesome. See, I have family too. So you have to have a very, very honest conversation with yourself. Mm-hmm. Do you want to be viable and around in 5 years?
It's a good question.
If you do, you have to commit to the future of finance and advisory and wealth management and the new fiduciary standards, or you should just sell off, cash out, and transition away.
Exactly. So definitely something to think about. But that being said, I think we'll call that there for today. As always, this has been the Crypto Collaborative Podcast. We appreciate you for watching. My name's Tyler.
Timnihill, go Sabres.
You had to throw that one in.
Detroit tonight, baby.
Oh boy, we'll see who wins that one. We'll probably know by the time this is released.
We're talking about playoffs.
But, yep. Cheers. Hope to see you soon.
Cheers.